listening to Hooked on Startups, where every week you'll hear from some of the most talented, inspiring, and successful entrepreneurs who shared their real-life stories, how they overcame challenges and failures, and how they mastered success. Get ready for some of the best business tips, tricks and tactics, and some frank, unscripted discussions. Here's your host, Matthew Sullivan.
On today's episode of Hooked on Startups, I'm absolutely delighted to have Nicholas Amato with me on the show. Nicholas, welcome to Hooked on Startups.
Hey, how you doing?
So, Nicholas, you're the founder and CEO of the 803 Mine project, where you're building the largest cryptocurrency mine in the United States.
That is correct.
And that's it. So that's the end of the interview, really. So I just wanted to clarify that point. Okay. Because obviously everybody out there knows what mining is and cryptocurrency. So it's a very short interview.
It's super easy. Yeah, everyone's seen that Bitcoin thing. And you've said as easily as we make Bitcoin, we're the ones that are actually producing the Bitcoin. That's it. You hang up right there, turn it off. You've seen everything you need to see.
Well, that's it. Exactly. Why complicate things? I guess we've probably got a few more minutes. But the real question is, and again, forgive me for asking the most basic of questions, but mining. So the concept of mining is, why is it mining and what is involved in creating Bitcoin? Is it not just a computer program where it's all there anyway?
Yeah. So let me kind of address that in a top level manner. What you have essentially, you have your probably the easiest way first is to introduce cryptocurrency, Bitcoin in general. Now, when I say Bitcoin, I'm using Bitcoin in a colloquial sense to really mean any and all cryptocurrencies. Now, while yes, I do also make Bitcoins, it's easier to say Bitcoin to be the catch-all term, same way you would say stock exchange versus New York Stock Exchange.
Sure.
Using a broad scope. So we have our cryptocurrencies, our Bitcoins. To use a Bitcoin, to be a user of Bitcoin, a payment processor, a company that accepts cryptocurrencies, or even someone that wants to hold or invest cryptocurrencies, you specifically do not need to mine. Mining is not required by the user to own or be in the cryptocurrency space. So it's a distinction I like to make clear. If you went back and you looked at the original Satoshi white paper for Bitcoin, 2009 or so, you'll see that there's one of his 9 pages is on Bitcoin mining. But it's important to understand it's part of this system, but it's not a part that each and every user themselves needs to be familiar with, other than know it's a thing. Similar to, let's look at like the Federal Reserve. You can spend dollars. You can go work, you can get paid in dollars, you could be a business and take dollars. But you don't need to actually manufacture the dollars. The Federal Reserve prints those. They control the dollars coming in from essentially repositories, banks, and when to print, when to buy back. It gets a little more complicated, but that's an easy answer.
But mining, but again, the whole concept of the creation of Bitcoins and how they become part of the blockchain and how they're tracked, what's involved in that and what is the value or the importance of a mining company?
So specifically, the mining itself comes from the very concept of Bitcoin in general. You have the very first Bitcoin block. It's known as the Genesis block. It was the first Bitcoins created by the blockchain. Blockchain, of course, being a record of all blocks. Each block you can think of as a page in the blockchain, which would be a ledger in the cloud. Easy way to look at it. So from that very first day, on the very first block that was created, all subsequent Bitcoins must be a result of that block. Mining itself, or actually verifying, is what is going on, is verifying the record of all subsequent Bitcoins. So each time we add a block to our blockchain, new Bitcoins are produced and awarded to the miner that finds them. The miner that finds them has to verify all the Bitcoins are true and the account owners are truly the owners of the said Bitcoin by verifying it all the way back to its date of creation. So if you think of it in simple terms, day one, first block, we've got 50 coins. Next block, another 50 coins. Third block, a guy moves 50 coins out. The miners have to figure out that he really owned those, and those really came from the proof into the blockchain, which is here. And then each and every subsequent transaction, the miners have to figure out where it went, how it went, in that the actual owner is the owner of the account. So that's simply put. Now, how does that relate to today, what's happened, and why it's really important? And a bit longer of a story. As you can imagine, we are now almost a decade into Bitcoin. So that record is rather large.
Yep.
Now, since the record is in the cloud, the miners are the ones that are responsible for verifying the accuracy and maintaining that distributed ledger in the cloud. It takes a lot of computing power.
Is it almost like, so every time a new Bitcoin is created, then all of the previous blocks in the blockchain have to be updated?
Not essentially, just anyone that's carrying the record, or any miner that has the record, has to update their record. Your blockchain wallet would have to be updated. Most people use an online wallet like a Coinbase or an exchange. They'll update automatically in the cloud, and you'll sync into that. If you had an offline account, you'd have to manually update your records and your history, which anyone at home wants to try it, go download bitcoin.exe if you've got Windows, and actually open the blockchain on your computer and open a hard wallet on your computer. It will probably take you around a month just to download that file, and I wish I was kidding, but
yes,
it takes literally that long.
And I think that's what we're really trying to get across, is just the scale. I mean, it was once, I think it was described as almost a waste, as it were, because you've got efficient computing power, and then you've got power which uses or takes advantage of all of this available computing power and available memory. So it seems like an incredibly wasteful use. However, because of the cheapness of computing power and memory, you're able to create these blockchains that are so resilient. But the downside is that huge computing power that's required.
Exactly. It requires a ton of computing power. So originally, you could use your laptop or desktop at home. It'd be pretty easy. You could download that file. It wouldn't take more than maybe an hour or two to download. And your at-home CPU could process Bitcoin blocks, for which you could be awarded Bitcoin.
Yeah.
You solved the block. From there, we progressed onto graphics cards, which are faster and by an exponential scale, graphics cards. And those became outdated for Bitcoin mining 2012, maybe even 2011, we kind of stopped. So the progression from CPU to GPU was almost immediate, and then GPU onto ASIC, the application specific. We moved on to those years ago. So what has happened is when it comes to actually Bitcoin, and I mean this in the Bitcoin crypto itself, Litecoin itself, and a couple others, really the main ones being any program that would use the Bitcoin algorithms, the Litecoin algorithms, and now recently X11, which would be the Dash protocol, the Dash algorithm, has increased. Those three use a specific protocol, and it is an exponential increase in terms of power.
Because your background is very much, I know you've been working in the crypto space for a number of years, so you were very much one of the early pioneers, I guess. But your background is trading, rapid trading, derivatives. Is it that sort of training? Has that given you the ability to see where these markets are likely to go?
Oh yeah. You have a basic economic principle called efficient market hypothesis, Decon 101. They call it efficient market hypothesis because you can't prove it. it assumes that one, all market participants are rational, and two, that all information is known by all parties. The second one, if you had info that was not known, that would be insider trading. That's prohibitive in a typical stock market. And then also people are rational. And I think the crypto space is anything but rational. As we know, people act on emotion or, I've got a dozen contacts who it doesn't matter what's the best today. It doesn't matter if they take a loss today. They will only take Bitcoin, period. Period. There's no ifs, ands, or buts. It's not about the profit. It's just they want more total Bitcoin because they are dead set on Bitcoin being the leader in the long run.
And what again, talking about efficient markets, but how much of the value of Bitcoin do you think is driven by speculation, and how much is driven by real likely use case?
Zero on speculation. It's not even close. I actually tweeted one the other day, and it had like several hundred retweets. Where everyone was talking about Bitcoin being a bubble, and I just put up a picture of the United States debt. And
we really, when we're talking about Bitcoin, we really mustn't mention was it $20 trillion worth of debt?
Mm-hmm.
But that's really interesting because
it's the rate of growth of debt.
But again, that really brings into comparison how fiat currencies are created, how they operate, because the Fed effectively is creating money in the same way that Bitcoin was created by Satoshi Nakamoto. So there's a limited supply for Bitcoin. There's an unlimited supply of dollars. So now theoretically, there's all sorts of economic theories. But you're right. But there is a limited supply, and there's the technological advantage. Now, the important thing about money being controlled by governments is security. Now, one of the key messages that you have with 803 Mine is that mining, which is the lifeblood of the ability for the currency to operate, there are very few miners that are in the US. The bulk of mining activity happens primarily in China for a number of reasons. So can we just explore the real benefit and the real value that 803 Mine brings in securing, if Bitcoin is going to be a major currency, which I think it probably is, then how important is it to have that sort of onshore mining capability?
It's actually several questions in one. First and foremost, the classification of Bitcoin as a currency that's when I got into it. It was the digital gold, if you will, a decentralized currency that no government could control and thus devalue based on X company needs a bailout. And that's why people would own gold. It's essentially your inflation hedge, but there's no real use for gold other than, rather good semiconductor and some dental fillings. Doesn't justify the value of gold, which, side note, gold is valued by the ounce, not the pound or kilo, and certainly not the metric ton.
Yeah.
Bitcoin is still the full unit. So if you start realizing Bitcoin's not the ounce, it's not the pound, it's the metric ton. There's no bit and U bit. Oh, we have a long way to go on the price of Bitcoin. So how far have we come in terms of mining? Bitcoin itself is the best application to show the advance in the computing technology as well as the computing power that certainly falls on deaf ears right now. 2003, and you can look this up, Intel was awarded a $103 million contract from the United States government to produce a 1 petaflop computer. A flop is similar to a hash in that it's a unit of mathematical calculation.
Yeah.
Flops are used for DNA sequencing, cryptology, etc. And that's 1 petaflop. It was 103 million for the computer, had about 106,000 CPUs inside. And in the last 15 years, 14 for that, we've gone back and forth between the United States, Russia, and China, making these supercomputers in the petaflop capacity. Last year, Intel was supposed to sell some chips to China for a 93 petaflop in 2016, and they were stopped and not allowed to sell those. Now, China still manufactures the computer and has a 93 petaflop computer going on. So, Bitcoin now. The total Bitcoin network in petaflops, and you can certainly verify this, blockchain.info, any block explorer, pull it right up.
Yeah.
The last I looked, we were over 80 million petaflops. Same unit. We're talking 93 is a $268 million computer, a national security risk for a 93 petaflop computer. And we have a network that's 80 million, and China owns 60% of that.
Now, that 80 million, is that the requirement
Yes.
to process the annual Bitcoin transactions?
The current. That number only goes up and only goes up exponentially as more miners come online. So that's today, not even 12 months from now. Here's why I mentioned the gold analogy and currency, because that would be the case if Bitcoin was only a pseudo commodity currency. It'd be similar to a gold, but I can break it down into any unit and I can transact it immediately. Whereas 5 ounces of gold, how do I buy a slice of pizza with an ounce of gold? Yeah, well, when I shave off a piece of gold, not going to function. That's how I originally thought. And I loved the idea of Bitcoin at that time. But then we grew and it became blockchain. Blockchain gives essentially you're now able to use a third party, an outside source, to store, for all intents and purposes, an infinite amount of data in an immutable ledger in the cloud that you don't have to pay them for.
Yeah.
The miners are compensated by the blockchain, and thus the mining fees per transaction. So if you have, imagine you are a company, I was talking to, in terms of an NDA, I can't say this, but they sell fractional shares of stocks on a smartphone app. There's only 2, so you can probably figure out. Okay, so they're able to say each customer owns 0.0000 of stock A. That ledger, first the code is 2.4 million lines. Then the ledger itself requires numerous servers, has a ton of operational cost. Whereas if you can just take that and chuck it into the cloud and let miners deal with it, that's a no-brainer for business. So what happens when we keep going down that road? We've got numerous people putting all this stuff in the blockchain, and miners are protecting its security. If we go out and look at our extreme example to make it as easy to understand as possible, we hit 2140 and all Bitcoins are mined. No more Bitcoin left to be mined. We've hit our cap, which we currently have about 16.5 million Bitcoin out of 21 million. So in the next 2 years, we'll make 2 million more. And then in the next 100 years, we'll make another 3 million. And
because it's a sort of really steep declining curve.
Yes. So price equals supply and demand, and supply is no one's even paying attention to what the supply looks like. If you know where that supply chart heads, we're not even close to its potential. And that's just as a commodity versus a blockchain element. So let me summarize this. I think it'll answer the question. Because with the blockchain, when all the Bitcoin are mined, why would a miner mine the Bitcoin blockchain? Well, they're paid 2 ways. New Bitcoins that are created approximately every 10 minutes, and any of the transaction fees you pay to move your coins. So the theory has always been, the way Satoshi wrote his white paper, was that as every roughly 4 years or 210,000 blocks, we have the reward to miners. Miners increase their reliance on fees, as well as a price increase in Bitcoin to keep them profitable and in operation. So far, so good. In fact, we're ahead of schedule.
Yep.
When we mine all the coins, what happens? There's only 2 scenarios. Either A, the price of Bitcoin itself is so high that miners are able to make a profit off the network fees alone.
Yeah.
Or they shut down and they don't mine the blockchain anymore.
But then again, then let's look at the what are there? 950 ICOs have launched in the last few months. Each of those has a separate currency. So where do you see the integration of all of these individual cryptocurrencies? How do you see the universe of cryptocurrencies moving? Because we have the Filecoin, Ether, Litecoin, Zcash, Monero, all the coins. How do you see that? The utility tokens or the other tokens that are being created, how are they going to mesh together, and what's the ecosystem going to look like?
Well, so it's a bit more than that. So just even the fact that all the Bitcoin could be mined, and mining would have no incentive to continue mining if it wasn't for transaction fees, shows that the more and more businesses and people get into the blockchain and store information in the blockchain, and look how much computing power there already is. We're talking 80 million petaflops. That's a level. There is not, I doubt there's a viewer out here who's even aware of that term, nor understands the national security risk. If that was redirected to shut down satellites, I mean, you would take an entire continent offline in seconds.
Yeah.
Seconds. So, and you couldn't bring it back online unless you had an equal sum of power, which no one does.
Yeah.
Major, it's not stopping, and that's only going to keep getting larger. So the requirement to really maintain and continue the records of the blockchain will only become a larger and larger business function. Which blockchain is the best for applications per se? That's more of a speculation than a quantifiable data point.
Let's go back to security. I get your point, but let's go back. So we're trying to look too far into the future, but let's talk about security then. So let's really, and again, one of the key messages that 803mine is putting out is that the importance of security, and how, as you said, 60% of Bitcoin is mined in China. How important is the fact that we have no reliability on China, or how easy is it for someone like China to destabilize the cryptocurrency market?
There's something known as the double spend, was the original phrasing with Bitcoin. It's called the double spend, which would be essentially you move your Bitcoin and pay two people at once. The blockchain is going to verify which payment was first and who actually gets the coin, and the other one would be orphaned and abandoned block. It wouldn't confirm that payment. If you could control 51% of the network power, which would mean total power times 2 plus 1, because you need to equal the current amount, plus one more unit. If you could control 51% of the network, you could potentially rewrite that blockchain and confirm however you wanted to. So if a large,
is that known as breaking consensus?
Correct. Or manipulating consensus. It may not be like with a fork that's popular in the news. That's done with an economic benefit and a sort of altruistic reasoning. But there also could be the opposite, where you have malicious intent.
Which is entirely possible. Absolutely. I mean, we've seen all sorts of cyber attacks from North Korea, for example. So how important is it to bring that mining onshore?
I think it's of paramount importance, and I definitely don't think people are really paying attention to this yet. It would be more of like a news story after it's too late, and everyone scrambles and says, well, shoot, we should have seen this coming. How do we fix this now? Well, you can go into any computer store and look at the shelves for computer parts. Even the graphics cards are literally sold out.
Yeah.
You will have a lead time just to get hardware, let alone get it online, operational, and then do it. There would be no immediate, okay, we can plug and play and port everything to Bitcoin and throw all our resources at Bitcoin to protect Bitcoin. It just couldn't be done in any time frame that would make it worthwhile. So I think, extremely important. And as more United States businesses are relying on blockchain and making investments into blockchain, they should be aware of what they're getting into, and the importance of protecting and verifying the blockchain. Not only is mining profitable and you're making crypto, and crypto's on a massive bull market. I mean, Bitcoin's top performing currency 3 years in a row.
Yeah.
3 years in a row. People have not even noticed that. You have right now you have a two-way win. You're making crypto that's going up, and you're making a USD gain per day off equipment. So you have a win-win business model. But it's completely missed. I can't tell you. I mean, you can even go online, look at the crypto sectors, or I saw one from, I think it was Deloitte, one of the big four accounting firms, and it has blockchain sectors and ICO companies, and there's not a single mining company listed whatsoever. In fact, it's completely missed.
The other thing I want to talk about as well is, you talk about your company being the $100 million mining company, and we were talking about gold earlier, and the importance of, yeah, and 100 million is obviously a start. But when currency was fixed to gold, it was asset backed. So you're raising capital through the distribution of coins through an ICO. But the difference with your offering is that each coin is actually backed by, is that you making another $20 million or something on your mining rig?
That's us just hitting four blocks in a row. So
there'll be time to celebrate. Hence the sort of Michelob Brewing Company behind you. Yes. My question really is that the tokens, or the tokens that you're generating will be asset backed. So there's a real difference between having tokens that are simply where the value is dependent on the successful implementation of the technology the companies are trying to roll out. What you're saying is that if you buy these tokens as a token holder, you get a share of the profits, you get a share of the success of 803 Mine. And I don't think there are any other companies that I've seen, and this is very different to Bitcoin. So is this the shape of things to come, do you think?
I think it's due to an inefficient market. So if people really understood what exactly we can do, it should be a no-brainer. Let me just clarify a few of the terms there. So what we have specifically is your token just represents your membership access. Think of it as your subscription right. The same way you might subscribe to a mutual fund, etc. So it's your membership share. As each membership share sells, we divide the total revenue over total sold shares, if you will, or subscriptions sold, which in this case would phrase as tokens. That way there's no dilution, and the project can scale all the way up from the token level. So 1 token sold, 1 million tokens sold, it's the same difference. Each token is going to pay the same amount out. A clear point, not profit. Profit would fail the Howey test, obviously, but revenue. So the way it's structured, it's the cryptos produced. All cryptos come in, 50% go out to the tokens, 25% pays bills, such as power, and the other 25 is reinvested into more hardware. So more hardware, we get more production, and thus more coming out to each token. But it's based on the revenues, because I don't like the model anyway of profit, especially in the crypto space.
Because you can manipulate that, I guess.
Right. What would my compensation be worth as a CEO to operate this? And who would be responsible? Well, board of directors appoints CEO. Well, if I'm chairman of the board, president, and CEO, like Jamie Dimon at JP Morgan, yes, he is, and New York Fed chairman, I don't think that's a fair compensation plan for stakeholders, or in this token holders. And so we generate essentially corporate tokens for every 13.6 sold. That way it allows us to have 1.1 million sold out of 1.25 million. It's a little funky math. We kind of had to circle back to that in retrospect.
I guess everything is a function of 803, it seems. Everything is sort of, which is that the primordial number?
That's just a lucky number to me. Has nothing to do with any business or anything.
You talked earlier about the Howey test. So one of the ways that you're structuring your offering, and obviously I know that you've got a great legal team on board, and with some of these other offerings that are early stage offerings, so there are all sorts of gaps in regulation, legislation. And you're plugged into the pulse of what's happening in the blockchain and the crypto universe. What are you hearing in terms of how you think the US, in particular, regulatory authorities are viewing a lot of this activity?
I think a lot of the regulators are behind the times, and it's going to be a lot of explanation to kind of catch them up. So one of the unique things when you're mining Bitcoin, and it's actually defined in the FinCEN regs with Ripple Labs. Anyway, so this is not Nick's idea or Nick hopes that this will work.
Yeah.
It's black and white. It literally says when you're making any cryptocurrency from the result of your own computing or manufacturing effort, that coin is not a money, the company is not a money transmitter service. Anyone selling like a prepaid interest would not be selling a crypto, and any of the users who receive the freshly minted coin are also not money transmitters. There's explicitly exempt from that regulation because it's fresh, it's mined.
Because you're a manufacturer effectively, as opposed to simply acting as an intermediary.
And the intermediary is the one that would be responsible for KYC, AML, compliance, money laundering. Where did the cash come from to purchase this guy's crypto, and who sold it? How did he get paid? When you're making it fresh, all we're really doing is managing the hash rates and which coins to be mining in our fund versus selling a specific coin. And in fact, the reason it's written like that is due to the difficulty. The top producing Bitcoin miner right now, if you had it solo, just mining by itself to hit Bitcoin, last I checked was about a week ago, would be 6,226 days. So about 20 years to hit a block solo, assuming no more increases in difficulty.
Is that because of the time it takes to try and crack that 256-bit code?
That's because of 80 million petaflops. One machine doesn't even put a dent in it. In fact, you will likely never produce any Bitcoin from only one machine. It would be like winning a lottery. So
yeah.
So
tell me a bit more. Sorry, go ahead.
Like the Howey test says that a guarantee of profits or a guarantee of a return, you cannot actually guarantee that you ever produce a coin because of the way the blockchains work. Sure, if you were to have half the Bitcoin network, in theory, you should have half the coins produced. But you still can't guarantee that because each block is independent of the prior. It'd be like me saying, look, I've watched this blackjack, I've watched this roulette, it's been black 100 times in a row.
Yeah.
Give me the money, it's going to go red, I know it. No, it's probably black again because it was black 100 times. Or actually, it's still 50-50. Same thing happens with the mining. It truly is essentially luck each time, and you try to mitigate that or improve your odds by pooling resources and doing some other things that we do that's a little different.
Yeah, I guess what you're doing effectively, the more computers you have, the more lottery tickets you're buying. So the more likelihood there is of you getting the winning number in very simple terms. But then you just do the thing over and over again. So it's not, it's every time you do a transaction, you're trying to crack this incredibly complex code, which is there to protect the integrity of the blockchain.
And there's also ways, there's some things that we do a bit differently would be how exactly we're mining, what's the most profitable thing to mine. when you're looking at increasing a bottom line, revenue minus expense is your bottom line.
Yeah.
So most people say, well, every mine's in China because it's cheaper power. Okay, let's actually break those numbers down and realize that it's not really that much cheaper. You still not only need power, you need.
So just in case anybody notices the slight background, we took a pause there because you just blew up your computer, basically.
Yeah, it was, as I said, if you download a hardware wallet onto your computer, it can take days to months to download. So I was updating one that we're trying to integrate into our pool, and it exceeded the thermal warning on the computer, and it shut itself down.
So there was a real life example of just how difficult this business is. Well, look, let's talk about the offering that you have available right now and how people can get involved.
Sure. Pretty simple to do. Just go onto our website, 803mind.com, and you can purchase your membership subscription that way. To be honest, the marketing behind ICO and coin offering platform makes this very feasible to do. However, bless you, in its core, you essentially are purchasing a membership subscription to our mining operation. So it was really easy to get involved. At the moment, we can do ACH deposits, wire, and crypto only. No credit card at the moment.
And how do people get? I mean, is the best way of contacting you 803mind.com, or what's the best way of people finding out more about what you're doing and how to get involved? Because I think you're just about to close or have you just closed a round?
Yeah, we just closed the last round yesterday. So one of the things we've been trying to do is actually keep it a bit under wraps. May sound counterintuitive, but there's a reasoning behind it. I'm a big believer that if you actually have a pre-sale or a friends and family round, then that's what you should be offering it to. People that actually believe in the vision, believe in the project, and want to be part of it from the start. The see it to believe it people will always follow once they've seen, at which point your price should be higher. So one of the things that I'm in the middle of doing is integrating wallet systems internally into our website, not only to store tokens or your membership access, but also store crypto that you would be entitled to distribution of. It seems the market, I'm a lot different than I think most people. I operate with integrity, and I try to be honest and fair.
Yeah.
And there, as you know, if you're actually in an ICO space, you're participating in any ICO, especially if it's ERC20, you need an Ethereum wallet that can handle that token. When we're getting people signing up with a mailing address instead of an Ethereum address,
yeah,
I already know the blow up that's going to happen between or among all the ICOs where they're just going to say, oh, too bad you put the wrong address in. You don't get it. Or you put your account in. Too bad. And yeah, buyer beware. But why would I run a business like that? That's asinine. That's not how you do business. It's not how you do business in America. You have to adapt your business model. So I said, okay, notwithstanding there's a major flaw on ERC20 itself, not us, everybody, it did not get fixed in the fork. You're welcome to look that up. Recursive call attack. With enough computing power, you can essentially pilfer any token contract out of any wallet. It's right on their GitHub. So using ERC20 does not make sense from a security standpoint, let alone a functionality standpoint. You have to do something different. So since we like to use the platform of the ICO market, it's a great way to really build a brand and reach out to people. It makes sense to store those internally per member or assign it at a later date. But at this point, you've got way too many people entering the space, literally buying crypto for the first time.
Yeah.
You just couldn't do that. You know, it's one thing to say, hey, look, I've got 5 guys with $1 million in Bitcoin, and they all want, they all get money, and they want to put $1 million in, and great. Right. That's people like me. I get what's going on. That's not why you enter a public market and try to build a brand and reach out to a crowd of people. You would go to 5 guys and say, okay, pony up million, bam,
Sure.
20%, 20%, 20%, easy. You reach into a crowd because you're trying to build something that's bigger than you yourself. And in this case, again, truly this is an American project, American business. I'm probably one of the most patriotic people you'll meet, despite numerous people that keep saying you should have a separate company do this, and you should put a company in the Caymans or this.
Yeah, exactly.
Okay, I majored in accounting at Penn State and finance, and what most people don't know is there is no statute of limitation for fraud.
Yes.
So if you are intentionally trying to defraud the United States government or evade taxes, that's fraud. There's no statute of limitation, and I would guarantee the regulators throw the book at somebody if it comes to that. I would much rather do everything the right way or to the best of my ability in the United States and go as far as this road can possibly go. Because
which I think is brilliant. I think that's really the way that it's great to see that that's how these types of offerings, they're really the offerings with integrity, that's how they're moving.
It's like, I wish I could say there were more that had that. And there's a lot of your get rich quick people. There's people that want tokens just to trade it.
Sure.
Kick ICO. I was told, I know this guy who knows the creators of Kick ICO when they were launching, told me to go on and put ourselves on Kick ICO. They still have not replied back to me.
Yeah.
Whatsoever. If you look at their token offering and watch what it did in the market, that thing went straight up and then straight down.
Yeah.
That's literally your definition of pump and dump, boiler room scheme. I would imagine the SEC would be prompt to investigate a transaction like that first and foremost before looking at things like Howey tests.
Yeah.
Because that's clearly affecting. A court of law will look at fair and equitable and what's the economic loss to a participant. That is clear, quantifiable economic loss to a participant. When I adjust our business model or take extra precautions so that we're ensuring that each person gets what they're paying for, that's good business. It's the way things are supposed to be done. And I'm sure we have some regulatory hurdles that will come up. I've had numerous people try to say how we test or a security, despite they're missing the fact that these are fresh Bitcoins because mining is not even understood. So the whole ecosystem is so new that, again, it's why I only really want people in at this stage who are not the see it to believe it people.
Understood. Yeah.
I want to just do everything the right way, and the results will speak for themselves, right? I mean, if we're ready for our first distribution and there's 1 penny per token, everyone goes, well, wait, this didn't work. Where's all the money? Well, then obviously the business doesn't work and it's a fail. If I deliver even more of a return than I promised, the floodgates will open up.
It is incredible. Yeah. I mean, the amazing thing, Nicholas, it's just astonishing just to understand just the maths and the science behind this. And the fact is we are still at such an early stage. So just the scale, and that really puts into perspective what's happening now compared to the potential for the future. So if all of this is already happening, you must be hugely excited about where you are and, where the life cycle is, having spent the last 5 years of hard labor, I guess, just waiting for the world to pick it up.
Brain labor. Yeah, well, I mean, even now, literally, I've had some Bitcoin since $40, and then the Cypress bailout happens to go to $250, and everyone cries bubble. Then we go to $1,000, everyone cries bubble, and then everyone gets doxxed again. So
Yeah.
it crashed, and now it's 6,000. Everyone's crying bubble again.
Yeah.
What happened in the 2000s in the United States with the NASDAQ? And guess what? We're at a record high today. It's not even a matter of a bubble. The supply of Bitcoin has doubled in 5 years. This time, we're not even going to get 10% more Bitcoins in 5 years.
So what are you going to do when you buy your own island in the Caribbean? Are you going to just fill it with mining? Is that where you're going to be like the evil overlord? Will you have a white cat and sort of say, Mr. Bond, I've been expecting you?
Actually, my Dr. Evil cat, right? $100 billion, which we just for Bitcoin.
At the beginning. Anyway, enough of this Bitcoin stuff. I got some real questions for you now.
Sure. Let's do it.
So this is my questionnaire from James Lipton. Thank you again, James. First question. What is your favorite word?
What is my favorite word?
Come on, I sent you this list before. You should have these prepared.
Should have. Is that should have?
I mean, what have you been doing apart from mining billions of dollars of Bitcoin?
If I had a counter for how many hours in a day I actually work, I mean, to put in perspective, let's see, 2 days ago, I went to bed at 4 a.m. And then last night I went to bed at 3 and got up at 9 today.
That meant you're creating 25 hours in a day, theoretically. So you're actually inventing time.
Somewhere time travel, yeah. I mean, that's easy to do with this many computers. Ultimately, my real favorite word is can't. Because I like when people say I can't do something or they can't do something. It just kind of shows me where they're at.
It's funny because a lot of people have that as their least favorite word. So what is your least favorite word?
I think.
Oh yeah, I know what you mean. Yeah, okay.
Yes. Because really, if somebody tells me it's an excuse, right? Like there's nothing you theoretically can't or couldn't accomplish. If you say I can't do this because I don't have $1 million, well, it's not you can't do it. The reason is you're not finding a solution to your $1 million question. And so I like to I'm a pretty smart person, so I kind of like to see the difference in like how people react to scenarios, and I'll purposely ask certain may sound weird questions just to sort of see reactions and know how to answer things.
Fantastic.
It's like chess.
As my third question then, so what are you most excited about right now? I can sort of guess.
I'm most excited really about building out our actual mining pool operation. So the pool itself is sort of the second level to my brainchild here, where, look, anybody in the world can go out, you can buy graphics cards, you can get computers online, piece of cake. Like I said, you saw when I set up, I got a whole stack of rigs right here. Sure, great, you plug them on, awesome. Markets get more efficient over time, period. When they hit that point, that's the point I'm looking for. I'm looking for everybody else to cry uncle.
Yeah.
And we just shut them all out. Now, to do that, you need to be prepped. You need to have available capital. I'm going to need money to acquire other companies, buy out other hardware, which I would plan to get for pennies on the dollar. And a lot of that comes down to our pool function and how we're actually mining and what coins we're operating. So I don't have it on this website just yet because we don't have our graphics cards machines linked into them, and it only shows the tech that's online. So I really love our pool. Pool.803mine.com. And there's a few things about it. We weren't supposed to have any tech online until December because there's a lead time for parts. But everyone keeps asking, well, where's computers online? Well, that's why part of the securities law is why it has to start with a zero balance in all the accounts and grow, because otherwise there's potential assets or equity that could be sold. So I intentionally had everything set a baseline at zero. Also, then it's not a Nick puts in $5 million of his money and sells his own equipment out to the public. That like doesn't, you know what I mean? Those are not,
yes,
those are the people that get rich quick scam, and I so against that, you have no idea. So I like it being built, and I like anyone that can come in. I mean, one machine, even if let's say $2,000, but you can buy a token for $100. Not everyone has $2,000.
sure.
Nor do they have $20,000 to get 10 machines to get a Bitcoin, a Litecoin, a Dash, an Ether. They're like, well, I can't even enter this market. It's capital intensive.
Yeah.
Or there's a guy who's sitting there with like $1 million, and he says, sure, I can buy them. Where am I going to put them?
Yeah, of course.
Great. I can handle both sides of that coin. We mostly have the entry-level people in right now. A lot of the people are see it to believe it. So my pool really is what will bring those in, because that's people like myself. So pool.io3 mine, I've got a few altcoins up on there. We've got a few rigs on, not too many right now, but again, it's still we're a month early. So I think there's like 80 workers on the site. So that's all that's not supposed to be there right now.
So my next question then, so what turns you off right now?
Yeah.
Apart from your electricity bill.
The electricity bill doesn't take crypto.
Yes.
So paying that in USD is a problem. What actually does, at the risk of sounding political, is really the fake news. I literally saw a post the other day that said how this small island using stones from 1,000 years ago is changing the blockchain landscape. And they're talking about like one of the most basic fundamental principles of, I'm not the history person, I forget the island's name, but essentially these big rock stones, and it's how they would determine who owned what on the island.
Yes.
And eventually it got washed in the ocean, and they still continued on with their ownership records, which is the analogy for crypto. But that's not news. That's 6 years ago news.
Yes.
That you're just coming out with. So then I watch and I see, and I mean, I'll even throw these ones out. I see Roger Ver get into a little battle with Charlie Lee, and you know, I've talked to Charlie for years with Litecoin. I'm like one of the biggest Litecoin supporters there could be. But Roger's trying to get him for 250 Bitcoin, the 2x, and they want to trade. And I'm like, add another zero to that, because come on. And then he goes dark and doesn't even reply. So, like, people like that, it's like, well, there's so many new people entering this market that they don't know who to trust. And what I know is I have the essentially Rolodex to every old school Bitcoin person that you could find,
Sure.
particularly in America, and particularly mining in America for sure. And remember, we didn't get into Bitcoin because it was blockchain or Ethereum or Twitter accounts and media. This is a anonymous, pseudo-anonymous way to store assets that are not subject to freezing, seizure, regulation, or a supply control by a government. It was a decentralized system and a system of anonymity. So a lot of the Bitcoin people, and in particular a lot of people holding a lot of Bitcoin, certainly don't want people to know they have this much Bitcoin. Particularly with the IRS as well. If you sell your Bitcoin that you've had from years ago,
yeah, there's a big tax bill there. Which leads me neatly on to the next question. Which sound or noise do you love? Is it the sound of ka-ching or something? Or
I used to work in my dad's liquor stores growing up, and the phone. And here's why. Nobody wants to answer the phone. And no employee wants to answer the phone, ever. They hate answering phone calls, right? And I would sit there and I go, oh, the cash register's ringing. And I'd answer the phone. Because you have a customer on the phone. Well, how do you do business? Exactly. And you're ignoring, like, they're literally calling saying, hi, sir, I want to do business. And you're like, no, I'm not going to call that. No,
Which is, that is very interesting. So what sound or noise do you hate?
Silence.
Thinking time, silence, or just downtime? Does that mean no fans? Is there not a moment where you just think, I wish the fans would just shut up for a second, just to let me catch my breath?
No. Well, the ASIC fans. If I had any ASICs on, I've got 3 on the floor right here, but they're off. They kind of literally sound like a plane engine taking off.
Okay, we'll make an exception for the ASIC fans then. So silence unless it's an ASIC fan.
Yeah, I just kind of like noise in general. It just kind of helps me focus. You probably could tell I have ADD, so noise, and it's been scientifically proven that doing mundane tasks, listening to white noise, even the theory that classical music would have improvements on brain function, that theory has been shown to be a little recently. I just saw an article on it, where they were showing subjects who normally listen to heavy metal, listening to heavy metal while working, having an increased positive correlation than as if they listen to classical music. But
funny enough, one of the guys I had on my podcast, there's a company called Focus at Will. So 2 guys, Will Henshaw and John Vitale, created this company where they're record producers and musicians, and they discovered that if you have ADD, that the music that makes you focus more than anything else is not the calm stuff. It is that heavy metal, that incredibly loud, stimulating stuff. So you should. I'll send you the link to Focus at Will. But it's fascinating what you say.
I wonder if it was their article I read. I literally read it within the last 4 weeks.
Well, I'll make sure that the link to Focus at Will is on the site. So now my favorite question, which is, what is your favorite curse word?
So if anyone's watching this and they're familiar with New Jersey, that's where I was born and raised. So New Jersey, basically you're going to curse every other word. I tend to try to watch my mouth, but definitely the F word is going to be in normal speaking. You're going to use probably at least an F-bomb per sentence.
Which is great, because otherwise, there's language is lacking without the F-bomb. I think it's just not rich enough.
Well, sometimes it's the most appropriate word.
It is in many, many circumstances for all sorts of different situations, and that is a fact, ladies and gentlemen.
You break your arm.
Exactly, amongst many other things.
Oh, yes. Shoot. You don't say, oh, shoot. It hurts way more than an oh, shoot.
I know. And there is your friendly F-bomb waiting for you. So there it is. So my next question is, what profession other than your own would you like to attempt?
Profession? Oof. That's a funny one. Well, that's why you asked where I would go if I would have an island or anything. It's pretty, I think, semi-ironic, but a gold mining operation.
I can see that. And what profession what would you not like to attempt?
Brain surgery.
Well, I suppose the two are related. And my last question, Nick, and forgive me for calling you Nick. Sorry, it's Nicholas.
Nicholas is the legal name, so it doesn't matter. Everyone calls me Nick.
So my last question, Nicholas, if heaven exists, what would you like to hear God say when you arrive at the pearly gates?
Oh, this guy.
Come on in. That's right.
It's okay. We got a blockchain. We're going to put that in the cloud soon. It'll be on the blockchain. You just you'll verify your ownership into heaven with your new token.
That is a very interesting thing to finish on. Just the fact that heaven is now blockchain enabled.
Well, I can one up that for sure. Everyone wants to know who Satoshi is, right? And everyone's got their theories. I would say my theory has got to be one of the leading ones, and I haven't seen too many people publicize it. I definitely don't have to talk to Emmanuel. He is absolutely on that side. Hal Finney, obviously PGP, and one of the original Bitcoin people. Here's what people don't know. 2014, Hal passed. And the icing on the cake, He is cryogenically frozen. Doesn't that sound like a Bitcoin guy to you?
Just in case. Does he have a white beard? And does he speak in a deep voice and go, oh, no, that's Santa Claus. Sorry, I'm getting confused here.
Well, I mean, I just would say that if you were the creator of Bitcoin in 2014, you probably wouldn't have touched your coins because it only got to 1,000. And
actually, that would be pretty cool. So you create Bitcoin, you cryogenically freeze yourself, wait for 100 years, and come back for the payoff. And then I hope that someone hasn't hacked your account in the meantime.
The whole hope might be that the Bitcoin network has the computing abilities to essentially reanimate or, reawaken a body from cryogenic freezing, which
I think that could be the subject of another podcast. I think, who knows?
But my money is on Hal all day long. I think he absolutely is the creator. It would make total sense. I would do the exact same thing if I was him. And if our computers figure out how to do that or time travel or something, I may try to wake him up and say, hey, buddy, did you do this?
Yeah.
You see the price? Look.
Like a scene out of Aliens or something. But Nicholas, it's been absolutely incredible having you on. Thank you so much. The knowledge that you have and the exciting things that you're doing is just endless. So I suggest that despite what you say, I want everyone to go and check out what you're doing with 803 Mine and to find if they can try and get a piece of what you're doing. So, thank you once again for being such an absolutely brilliant guest.
Oh, thank you. Again, absolutely check it out. I would say if I'm a numbers person, so if there's one thing you can gather, I'm pretty good at math and pretty good at economics. Although most economics is, in my opinion, pseudosciences, if you will. But supply and demand is tried and true. And it's almost a thing where I just ask you to close your eyes and sit back and let the work speak for itself. It's a ton of work. The less people I have asking me a zillion questions, the more work we can get done. And by the time the user interfaces are all done and everything looks, a nice user portal and a nice clean website is great. Does that tell me if the business makes money? No. I want to look at a balance sheet. I want to see earnings per share. I want to look at book value. I want to have an audit. That's, to me, I'm a traditional investor type person. That, to me, is what I want to see. I don't care that you've got the fanciest website out there. I care, okay, is there money in this for me to make?
Astonishing.
That's what I'm doing. So by the time everything looks nice and clean, I kind of have two battles going on right now. The first one is, can I get the payout numbers in line first where I want them and project those and show those real clean? Or do we make a nice user interface first? So we've got two basically competing avenues going. We'll see which one. I think they're both pretty much going to finish around the same time. So it's super exciting. It's a ton of work. If it was as simple as just plugging in hardware, then I'd just be selling hash power like any other, mining company could sell hash power. But this is way beyond that, and it's open to everybody. It's kind of the thing. I wanted to build something that, I myself am successful and I've done well. I've done well trading stocks, and obviously crypto's gone up. So I want something that really a nation can participate in and a brand we can all stand behind. So that's what I'm looking to build.
That's brilliant. Nicholas, thank you once again, and can't wait to follow the progress.
Oh, absolutely. I'll definitely come back and we'll follow up.